And it's funny, Rebecca, this morning I was speaking with one of our colleagues here at Bloomberg, an energy expert, and this was the thing he was talking about. He was like, all the missiles and all that going around. When it comes to energy prices, it's what assurances can we provide, can the U.S. provide to make sure that folks can get in and out of the Strait of Hormuz? And we saw the reaction in energy prices on that headline.
Yeah, absolutely. I mean, crude needed this headline. We were starting to see some panic trading overnight, with crude trading up 8%. And we saw the headlines you mentioned with Iraq starting to having to shut in production because they're not able to move crude through the strait. So providing these assurances absolutely was the relief the crude market needed to stabilize here. I think there's two things to consider with this. First is these are words right now, so we need to actually see how this is going to play out. What do those military escorts look like? How expensive is the insurance? And do the shippers feel a degree of comfort with what they're being provided so that they actually start moving through? The market is going to significantly sell off when those ships start moving. Until then, I think we can maintain somewhat of a premium just on the fact that the ships aren't moving and we are starting to build up storage in the Middle East that isn't able to kind of make its way into the market.
Yeah.
But I would come back to this point. This is absolutely what the market was looking for and talking about yesterday, is looking for these assurances. It's a big deal that we got them, but it's not the whole picture.
Well, we'll talk about the storage issue because that seems to have been the real bugaboo here. I mean, we've had kind of assurances from the Saudis and others that they'll increase production, but the idea is that you can't even get an empty tanker into the Strait of Hormuz to get that oil and then get it out, and the storage capacity that they already have at these terminals and on land, at least from what Bloomberg is reporting, are pretty much at capacity.
So, yeah, that's the key point. We're talking about stranded assets here where you can pump as much as you want, but if it can't go anywhere, it's irrelevant, right, to the market. I would say Iraq was known to have the least amount of storage capacity, so the market wasn't entirely surprised that they were the first to say they were going to shut in. From the data I've seen, it does look like the UAE and Saudi Arabia have a little bit more storage capacity that could last for maybe 20 to 25 days of a Strait of Hormuz closure. Now, you don't want to test those limits, and each day that passes, there was going to be more anxiety around that. But it isn't that they were at tank tops or storage capacity today. But it's not a never-ending story. They're eventually going to fill, and shut-ins are a very extreme outcome for the crude market. It's not just that you're producing and putting it in inventory and you can pull it out as soon as you need it. It takes time. So that is the key factor for the market, was figuring out how much storage capacity lies in the Middle East.
Yeah.
Iraq, obviously, the weak link.